All right, so let's get into the topic. And shout out to all you guys who just signed in. Again, we're talking about how pretty credit plays an important role in buying your first property. All right, so we greatly appreciate you joining. And by the way, this is being recorded. So being that it's being recorded, we will send you the recording within 2 business days. And I got a question from Wendell. So Wendell, is the app Credit Karma legit? Credit Karma is cool only because it gives you an insight as to what's on your credit report. But in regard to an accurate depiction of your FICO score, it is not. Credit Karma oftentimes inflates your FICO score. It reports higher than what it actually should be. So if you want an accurate depiction of your FICO score, we recommend Privacy Guard, Credit Check Total, and we have another one we're starting to look into, more Identity IQ as well. Okay, but when you apply for credit repair, for example, we'll give you some insight as to which is our preferred. Okay, so first-time home buyer. So many of you might be a first-time home buyer or be in that position where you want to buy your first home. And when I first got started, I didn't know where to get started. I didn't know what to do. I just thought, well, maybe I'll just hope and pray that I can get qualified. Honestly, I didn't know which way to get started, right? But I did know I had bad credit to start with. I didn't think I would qualify. You know, I thought, well, I know in college I was irresponsible with paying some bills. I also know in college I had some collections and some charge-offs, and after graduating, I had a lot of collection companies call me asking me where the cash at. Obviously, I didn't know where the cash was at because I was broke, but they would continuously call me to inquire about it. So, you know, going through that experience, I had huge reservations with applying for a mortgage because I thought I didn't qualify. And some of you guys might have heard this line before. What's more important than throwing money in the club? Credit. Credit is extremely important, not just for your personal use, but business use as well. And it's hard to get qualified for a home, a car, or even a job when you have bad credit. And that was the same case with me. I graduated the University of Georgia with a business degree in economics and a minor in statistics. But I could not get the job I wanted. I wanted a job in the business field, in the financial services arena. But I could not land a job simply because my credit was too poor. As a result, I had to settle for working for the government. So I'm grateful for working for the government for many years, but I couldn't get the job I wanted simply because my credit was bad. And that could have happened to you. You might not be living in the home you want, driving the car you want, or even in the job you want, simply because your credit is not up to par. And one of the first things I did to get started in real estate was window shop, because I had a creed on my wall. If I don't buy my first investment property by December 31st, 2010, I ought to be ashamed of myself. So I would read this creed over and over and over again to the point something spoke within me. It hit me. I said, well, the least I can do is window shop. At least I can do is practice before I get into the game. So what did I do? I just went to an open house. I didn't know any better. I didn't know anybody in the industry. I didn't have a mentor at that time. So I went to an open house and I happened to run into a real estate agent. Now this open house, this was in Jersey City. The house was valued at over $550,000. So it was way over my price, over my budget. But I didn't know any better. I just took some action. Reached out to the real estate agent, and he basically told me he doesn't want to spend time or gas money with unqualified individuals. So yes, this guy was pretty crude, very blunt in his communication, but he was absolutely right. Some of you guys might have been in that situation before. You don't want to reach out to a real estate agent to go find you a house, and they happen to find out you don't qualify for a mortgage, or you don't have any money in the bank, because they're thinking, well, how am I going to get paid? If you don't have the mortgage money, or if you don't have the down payment money, why on earth would I spend my time or my gas money with an unqualified individual like you? And again, that's what the real estate agent said to me. So that hurt. It was like a gut check, but he was absolutely right. I had to prove that I was credible. Simple and put, because he doesn't want to be spinning his wheels with someone that cannot buy a property. Okay, so the first thing I had to do, which I'm advising you today on this webinar, is find the money. That's the first step you need to do when getting started on real estate. Find the money. What's the second step? Find the deal. You don't want to find a deal first, and then you're running around like a chicken with its head cut off trying to get access to the capital. It's best to find the money first, so that way your real estate agent or wholesaler can find a deal that fits your pocket. So that's the first step you need to take if you're watching me now in this webinar. Find the money. But the downside was I couldn't get access to a mortgage because I had bad credit. So I couldn't find a lot of money. And the great thing about real estate in comparison to multiple asset classes out there is that real estate can be highly leverageable. You can go to a bank and say, hey, give me 80% of the money I need to buy this deal. It's hard to do that with other asset classes, but real estate is possible. It's only predicated upon you having a decent FICO score. So being that my FICO score was subpar, I had to get my credit fixed and roll in credit repair. So if you're in that situation where you're having debt collectors call you on a regular basis like myself, or that you know you had some collections, some charge-offs, even bankruptcies, medical bills, late pays, and the like, public records, it doesn't matter. If you know you had some negative stuff or inaccurate things, like on my FICO score, I had inaccurate things on my credit report. You seen it said Paul P. Herrera. Who's that? Right? It happens. So if you have negative or inaccurate items in your credit report, you need to enroll in credit repair. So I'm not saying you have to go with us. We do offer it, but you definitely have to get it done nonetheless. But I highly recommend you choose us because we will know how to repair your credit so you get qualified for mortgages. Again, I'm a real estate investor and I know what underwriters look for when qualifying you for the money. And in my situation, not only did I have bad credit getting started, I had minimum funds. I didn't have 20% down. I didn't have 20, 30, 40, 100,000 in the bank like I do now. I didn't have the liquidity. So I was in a tough spot. I didn't have the money. I had bad credit, couldn't qualify for mortgages. That's about 80% or 97.5% of financing, depending what type of mortgage you move forward with. And I didn't have any down payment money, very minimum funds. But I've decided to start accumulating a board of advisors. And I want to recommend that you do the same. A board of advisors means when you get started in real estate investing, I want you to be the real estate entrepreneur. You're that synergistic glue that brings all the resources together to make a deal happen. And you have people in the industry advise you, because people ask me this all the time. I'm on social media. We have over 3.5 million views on YouTube and about 54,000 followers on YouTube at the time of this recording. And many people ask me the same question. Hey, Juan Pablo, how should I incorporate a property in my state? Or what type of entity should I hold this property in my state? My response, bruh, I don't know. Your guess is as good as mine. They say, well, I thought you were the expert. Hey, I'm an entrepreneur, but I'm smart enough to make sure I have a board of advisors. An advisor called a real estate attorney who can advise me on the best way to hold properties in my state. Because I've done that in Pennsylvania. And I did a partnership and my attorney told me, hey, for a partnership, don't do an LLC. I'm sure you probably got that online somewhere, Juan Pablo, but don't do that. Do a limited partnership. But in the state of Georgia, you should do an LLC. In Texas, it could be a LLP, a limited liability partnership. Various different entities. But it's important to have a board of advisors. And a mortgage lender will be a great board of advisor for you. Or even a coach like myself. If you're interested in having someone coach you through the whole process, I can be part of your board of advisors. But just make sure when you have a board of advisors, you disclose all. Even if you think you don't qualify, don't hold anything back. That's like going to the doctor and you're not feeling well and you're scared to disclose all information to the doctor. Well, how else could he best help you out of your troubling position? If not, you only give him everything he needs to know so that he can lay it all out on the table and provide you with the best prescription, right? So same thing, whether it's with coaching, whether it's with a mortgage lender, bear all so that way people on your team can help you get out the rut that you're in. But the first step, find the money. Now, credit and income. Mortgage lenders want to see your credit worthiness. So if you find the money, you go to a mortgage broker, which I'm highly recommending you to do. Your mortgage lenders want to see your credit worthiness. Whether it's for a personal home or for an investment property, they still want to see how credible you are as a borrower. I'll repeat, mortgage lenders, whether it's for a personal residence or an investment mortgage, or investment property, they still want to see the credit worthiness of a borrower. Okay, so they want to see your FICO score, your debt to credit ratio, your debt to income ratio, the number of inquiries you have on your credit report, and the like. So you want to see a recent copy of your credit report, or they'll run their credit using their own credit monitoring service. But what I like to do is present a copy of my credit report. Okay, like I mentioned, I'm qualifying or I'm applying for a personal mortgage myself. So that's why I have a recent copy of my credit report so I can show it to a mortgage lender. Outside of their credit worthiness, mortgage lenders also want to see your financials. What do I mean by that? Mortgage lenders want to see your income, or they want to see documented income, tax returns, 1099s, W-2s, bank statements, pay stubs, and so forth. And they want to see this, most of the stuff for the past 2 years. So they want to see the past 2 years of your tax returns, your 1099s and W-2s, but the past 2 months of bank statements and pay stubs. So you might be thinking, hey, Juan Pablo, I don't have none of that stuff, man. I don't have no tax returns. I get paid under the table. Well, my friend, you can move forward with a low doc mortgage, which we provide. That's why it's called low doc. That means low documentation, because we have a huge following, a huge audience, a huge pool of clients who are wholesalers. They find deals for investors, but unfortunately, they don't document their income. So they don't prove it. But we can still help them get qualified for an investment mortgage if they apply. Okay. So for investment purposes, most mortgage lenders also want to see additional information, such as reserves, personal financial statements, and the property docs, meaning like the purchase and sale agreement, leases. They want to see the P&Ls, profit and loss statements, and so forth. But when you reach out to a mortgage lender, they're definitely going to reach out to you and say, hey, this is what I need. But before you reach out to a mortgage broker, just so you can save time, gather all your financials prior to reaching out to them. That's the best thing you can do when working with a mortgage lender. It's just being prepared. That's all it is, just being prepared. By you saying, hey, here's a copy of my credit report, here's all my financials, let me know if there's anything else you need, okay? All right, so what we're gonna do is just take a look at the chats as well as the questions and see if I can answer any questions for you guys. All right, let's see what else we got. So we talked about credit check total is pretty good. Yes, we preference from a credit repair standpoint, we use credit check total or privacyguard.com. Should we keep Privacy Guard from month to month? And at what level should we keep it? That's good. Yes, you should keep it month to month. The professional level is pretty fine. I think that's the middle one. I forgot the name of it, but the middle one should be perfectly fine. But you can always call them and negotiate at half the price so you can save money on it. Why are my scores on credit check total vastly different than the scores that my mortgage company pulls? Because they use a different credit monitoring service. That's all. But credit check total will give you a more accurate depiction of your FICO score. Okay. Thanks for the question. Let's see if we have any other Q&A. Can I co-sign for someone to get their first home in my business name? More than likely, no. And this is the reason why. When you're applying for a mortgage for someone to live in, right? A residential property, in other words, 80% of a mortgage underwriter's focus is on you, the borrower. 20% is on the property. Okay? So they want to see you, and they want you to personally guarantee it. Unfortunately, that's how it is for those type of properties, residential. And when I say residential, from a mortgage lender standpoint, that's anything from 1 to 4 units. Okay? And by the way, I am a licensed mortgage broker. The reason being is so I can know the underwriting of what underwriters look for, the mindset of what underwriters look for. Do I practice it? No, I don't, because I'd rather do online business, buying whole real estate investing, flipping, and so forth, because I'm getting to flipping a lot this year. So I don't have time right now to do mortgages for people, but I do understand the inner workings of underwriting. All right, so the next thing I had to go through was improve and remove. So I had to improve my income, for one, by working in my 9 to 5, by working more hours for 2 years consistently. So when it came to overtime, I did whatever I can to get access to it. Because if you had overtime in year 1 and by not year 2, from a mortgage lender standpoint, they'll take the average of the income you receive for the past 2 years. So you definitely want to push and get as much income documented on your W-2s or your tax returns as possible. So I improved my income. I also improved my credit by what? Removing negative and inaccurate items from my credit report. And you can do this legally according to the FCRA. That's the Fair Credit Reporting Act. You can dispute any inaccurate information on your FICO score. And so you can do this advantageously so that you can have an improved FICO score. But it's all predicated upon you taking a look at your credit report first and foremost. So you can see what's on there. And again, I showed my credit report and you've seen that it had incorrect name variations. It happens to us all. So you have to monitor your credit on a monthly basis. Because sometimes that person, Paul P. Herrera, whoever that cat is, that guy might have some negative stuff reported on my FICO score. And I don't want that to happen. Because I use my credit in order to get business funded as well as to get mortgages. So I can buy more properties, so I can have more passive income in my portfolio. Okay? So in my case, back to me, when I first got started moving forward with my first home, I actually had to enroll for credit repair for 2 years. It took me 2 years to remove a lot of negative stuff. And I can blame nobody but this guy, myself, because I was just financially irresponsible. Sure, I paid myself through college. Sure, I was doing whatever I can to make sure my needs were met because I'd rather pay my rent than pay a credit card. But at the end of the day, it was my fault. Okay, but just take ownership and just realize, hey, credit repair or having bad credit is not the end all be all. You can improve your FICO score. It might just take a concerted effort on your part, but if you want to have a hands-off approach, that's fine. That's what credit repair is for, and that's what we provide here at 100% Finance. But for my situation, it took me 2 years to remove those negative items to the point I qualified for a mortgage, for an FHA mortgage. But now, being that I have a credit repair company, we've improved the process so that you, my friend, won't have to be stuck in a credit repair program for 2 years. Fortunately, I was, but fortunately for you, you won't be stuck in credit repair for 2 years because we tailor our dispute letters and so forth to make sure that these negative items come off your credit report as quickly as possible because we understand the urgency of the matter. You want to get funded for business funding and you also want mortgages, right? So we want to get those negative, inaccurate information off your credit report as fast as possible. Now, we're about to switch gears a little bit and go into 3 secrets to improve your score. And as I showed you on my credit report, one way is name variations. Just removing inaccurate things off your credit report will help you, or inaccurate names from your credit report will help you improve your credit. Because at the end of the day, sometimes certain names as well as addresses that are linked to negative items are associated with your name or address on your credit report. So if you remove the name variation and the address, it makes it easier to remove the negative item that's reported on your credit report. Okay, so those are 2 of the secrets right there. And the 3rd secret is opting out. The credit bureaus, TransUnion, Experian, and Equifax, guess what? They're for-profit companies. They're not nonprofits. They're not governmental agencies. They're for-profit. So how do they make a profit? Great question. They sell your information and they prey on people who have a worser FICO score, a bad FICO score. So for those individuals who have a low FICO score, they sell your information to predatory lenders at a profit. So that's the reason why you get all these credit card offers, payday loans, or you get these auto dealership mailers and so forth in the mail as a result of the credit bureaus selling your information. Well, you can opt out. And we'll provide this information of how that you can yourself remove name variations, addresses, and opting out once you apply for one of our services. All you have to do is just to apply for the service and we'll send it to you in the email. Easy as 1, 2, 3 step process for you to boost your FICO score. Easy, do it yourself. Improve your name variations, your addresses, as well as opting out. Very simple, but it can help boost your FICO score by doing so. But again, it's only for those who apply for a service we have if you book a call. And you'll get access to this at the end of this webinar as long as you book a call, which I get into a little bit later. So proof of funds. So one of the things that, how can I say this? You want to make sure you look pretty to the banks. So that way they can say yes to providing you with the financing you're looking for. So you want to make sure that you find a mortgage that fits your criteria. How do you do that? By reaching out to a mortgage broker. If you reach out to a mortgage broker and you provide them with all the financials and a copy of your credit report, like I stated earlier, they'll be able to look at your income, look at your credit, and as well as your goals, your desires, and they'll be able to tell you the best mortgage product out there for you. In my case, back to my story, it was an FHA, because I improved my FICO score after 2 years of credit repair to a 620. And at a 620 FICO score, I was able to get qualified for FHA, which is a mortgage program for a first-time home buyer, in which you can put down a small down payment of 3.5%. And like I stated earlier, I had minimum funds, so putting 3.5% down for a property was beautiful. That was a prayer that got answered, simply because I reached out to a mortgage broker, provided all my financials, my income, provided my credit report, my goals, and they said, hey, this is what you qualify for, and this is the terms. So if you do qualify for a mortgage, you want to obtain a pre-qual or a pre-qualification letter. A letter that basically states, like, hey, this individual, Juan Pablo, is qualified for an investment mortgage. This person can qualify for investment or personal residence, I should say. We're using FHA as an example. This person's qualified for a mortgage of $300,000. Interest rate, 4.25%, amortized over 30 years. It'll provide the details of your terms for your mortgage. And you want to use that when you're reaching out to a real estate agent. And not only do you want to have a pre-qualification letter, you also want to have bank statements to prove your down payment funds for for your real estate agent. And by the way, guys, if you have minimum funds like I do or I did in the past, and you don't have the money in the bank, so to speak, you can apply for business credit, and you can use business funding to cover some of your costs in regard to getting a home. Okay, that's one thing I use advantageously with business credit. And you can apply for the free consultation if you book a call. And again, for anyone who books a call and mentions to the sales representative that, hey, I booked a call, I want those 3 secrets, being able to update my name variations, addresses, and opt out, we'll give it to you for free. But you gotta make sure you mention that when you book a call, okay? And if you find a deal that fits your pockets, you'll be good to go in the closing that property. So once you have the proof of funds, you look pretty to the banks, you have a pre-qualification letter and your bank statements, you want to find a real estate agent so they can find a deal that fits your pockets. Okay, like I said earlier, my real estate agent didn't want to work with me until I provided the proof of funds. He said, hey, I want to spend my time or my gas driving you around, looking at properties, and you don't qualify for anything. So I took the necessary steps. I got qualified for FHA, and I had some money in the bank to show them I had the down payment money. Okay, so you want to do the same thing before you reach to a real estate agent. Now, if you don't qualify for a pre-qualification letter because of your credit, you have to do the same thing I did, credit repair. Okay, but hopefully it won't take you as long as it took me. Again, it took me 2 years. All right, so let's get into it. So now I got Eric Hobb. This is just his experience. And by the way, if you see these images, this is from our closed Facebook group. People who buy our ebooks, they comment, they ask questions, and also post their testimonies here. So this is Eric. Eric stated, hello to my 3 new homeboys. They like to call them our money team. He applied for 6 credit cards, got approved for 3. One card at $15,000, another for $3,000, another for $2,000, $20,000 total. So shout out to you, Eric. And this was from Seth. House number 5 on the contract for $42,000. So house number 5. So a lot of people who join our coaching program or they buy one of our ebooks, they're closing deals to get access to business credit, and they're improving their credit as well. So he got house number 5, and I replied here, congrats, big time. So it just makes my day that people can actually follow the instructions, and that's why I say at 100% Finance, our job is the 2 B's pretty much. One is the blueprint. We'll provide you with the blueprint, but you gotta bring the other B to the table, which is the burn desire. As long as you have the burn desire and we have the blueprint for you to follow, you can make a deal happen this year in 2018. All right. So now we're going to talk about a licensed mortgage lender, right? So as I said earlier, I am a licensed mortgage lender. Do I practice it? No. I'm hanging my license up so that way I can help people in other ways through the online blog, doing flips, buying whole investment properties, online business, being a property manager, and so forth, right? So I don't have the time to actually do mortgages for people, but I still have the mindset, the intel. So from a licensed mortgager standpoint, we normally check all 3 credit bureaus and we side with the middle score. So you happen to have one score that's pretty low because you tried doing credit repair, and let's say Equifax was stubborn None of those negative items will come off. That's perfectly fine. We'll side with the middle score. And we at 100% Finance, we know exactly what you need to do to get your credit looking pretty. Again, I'm a real estate investor and a licensed mortgage broker. So not just me, but my team as well, because everyone that's on my team is very trained and well and capable in regard to improving your FICO score. So if you want to apply so that we can take a look at your credit report and advise you, please do. And again, as an added bonus, we'll give you those 3 secrets: removing name variations, addresses, and opting out. But you have to mention it after you apply for the credit repair or any other service you may be interested in. Low-down mortgage, business credit, hard money, or even real estate coaching. So we make the teaching as simplistic and digestible as possible, because we understand that real estate investing can be a complicated subject matter. So we want to make sure we break it down. So that's the reason why we do these webinars and have over 800 videos on YouTube, to help educate the masses. We want you to be an educated consumer. And by the way, we actually practice what we preach. I'm a real estate investor. And many of you guys see me in Pittsburgh. Shout out to Sadia. She verified it. She's been in a lot of my properties. And other people who've been to my properties on tour just happen to take a look at the properties. So we're definitely practicing what we preach here at 100% Finance. And it's not just me who has properties too. Lewis has 19 units. Ryan has 6 units. Many of us are consistently closing on deals, and we all got pretty credit as well. Okay. So however, being that we do practice what we preach, just keep in mind, we're still a student in the real estate game. So anytime we receive new tips or new information, we always want to share with you. That's why we have so much more videos. And I just recently discovered in the 9 unit I closed November 2017, there's a 5th way of making making a profit, I should say, off of multifamily property. I normally did 4 ways. I got an acquisition fee. I got paid as a general partner. I'm talking about multifamily investing, property management, and a limited partner. But the 5th way is being a lender as well. So this 9 unit I just closed in November, I got paid 5 ways off that property, and I teach people how to do it. All right. So shout out to you guys who are interested and are students of the game as well. You always want to be an avid learner and don't think like you know it all. Okay. And we don't believe in theories or philosophies or hypothetical situations, just facts. That's all we preach about 100% Finance. We just want you to get results. That's it. Not what you could do, what you should do, but hey, this is what we've done, this is how we got results, and this is what you should do to get results as well. And here's another comment from Key. This is a previous coaching student I coached. Shout out to Ryan, he's part of the team, that's Hollywood. He's the COO of our company, Chief Operational Officer. I'm the CEO, Chief Executive Officer. But Key may mention my first rental property. Juan Pablo, thank you for your wisdom and guidance. I appreciate everything that you and the guys at 100% Finance have helped me learn. As I keep applying myself, I will be equipped with the knowledge and know-how to produce generational wealth. My ancestors will be blessed. Peace. So shout out to Key for your first rental property. That's a great picture as well. And we got Brittany as well, who just like she commented on here. Yep. Brittany right here liked it. She commented here. Just want to share that last April I received my first round of business credit for $32,500. Yesterday I received increases on 2 cars. Now I have $49,500 in business credit within 7 months. Thanks again to the 100 PF team, 100% Finance. So shout out to you, Brittany. I was fortunate to meet her in person. She came to Atlanta, went out to brunch. So if you guys from out of town, you'll be in Atlanta, just reach out to us. We'd love to link up with you and meet with you guys. We love interacting with the people. Okay, so we got comment from Barry. October 11th, I bought, rehab, and sold my first flip. Wow, what a journey. That's good. Barry again, I was awarded $47,000 in business credit on my first round. After a few weeks, I opened a business bank account and a business credit card with my mortgage provider. Excellent. I was awarded $22,000 in that business credit card. Thanks 100% Finance for everything. You're absolutely welcome. So if you guys need credit repair or funding, book a call. Book a call, you get the free consultation, and you receive our 3 secrets to improving your credit. Just make mention to it when you book the call. If you don't make mention to it, you won't get it. So book the call, and we'll help you with servicing you, whether it's credit repair, business funding, low-down mortgage, hard money, business credit, as well as give you those 3 secrets to improving your credit. And also make sure you have a credit monitoring service. It's our preference. PrivacyGuard.com and CreditCheckTotal.com. Again, I have no affiliation with these companies. They're just the best. They give an accurate depiction of your FICO score. Again, they don't give me a check for promoting them. They're just very good and very user-friendly. So I highly recommend you have an account with them prior to booking the call. But if not, that's cool. We'll still help you through it. All right. That's what we're all about. We're all about taking care of our clients and service you guys to the best way possible. And services we offer: business credit, low down mortgages, real money, that's the hard money. That stands for real estate acquisition line. So real, that's why it's that all caps, and credit repair. And even if you think you don't apply, whether it's for hard money, the real money, in other words, low down mortgages, business funding, apply anyway. It's free consultation. Why wouldn't you want to receive consultation based upon your one-on-one situation? It's personalized, strictly for you. Okay, and you just have to go to 100%finance.com to book it. And if you need some help, again, whether it's with getting a credit monitoring service, all thing you have to do is just go to the website and we'll help you out. So about your credit check total or privacy guard. You want to make sure you have less than 30% debt utilization. Request credit line increases every 6 months on your personal cards, but have them do it as a courtesy without doing a hard pull. Sometimes they'll say yes, sometimes they'll say no, but it doesn't hurt to ask. Do not apply for new credit unless you have to. As I stated, if you have any questions, book a call. If you're interested in business funding or a mortgage, we'll be able to look at your credit report and better advise you. Okay? And like I mentioned before, have a board of advisors. One in regards to your credit, that could be us, 100%finance.com. Mortgages, it can be a mortgage broker or us if you want to use this for low down mortgages for investment purposes. Business credit, real estate investing, etc. You want to have a board of advisors, people advising you how you should conduct your business. And keep your credit monitoring service, that's what that stands for, CMS, active and check it monthly. Like I stated, I check mine monthly and you see what happened. I have a name variation in my credit report. That's something else I have to dispute. And by the way, when you book a call, we'll give you those 3 secrets: to name variations, to removing those addresses, as well as to get you opt out. And call your creditors every month when you request credit line increases, especially, but call them every month and ask to see what kind of special promotions they may have. Okay? And how I continue to get multiple rounds of business funding by having a business credit advisor in my corner. And that's what we provide here at 100% Finance. We might tell you to foreign file your company in another state. We may also tell you to create a new entity to get more business funding and so forth. But we'll tailor it based upon your situation. And the only way we can do that is if you apply for the consultation. And do not close accounts. Keep them open as long as possible. Age of accounts greatly impacts your FICO score. I had an Old Navy card in the past and I shut it off, or I canceled it because I figured, well, I don't shop at Old Navy no more. I mean, who cares about Old Navy? I'm gonna cancel it. That was one of the worst mistakes I made in regards to my credit. I should have kept it open, let it lie dormant, but at least just having it open and getting age would have greatly impacted my FICO score. And be careful about co-signing. And you see I have here, look at this. I already had it in here in the PowerPoint. Be careful about co-signing. Personally speaking, I don't advise it. Okay, do things the right way. If the person's FICO score is not good enough for them to qualify for financing, tell them to enroll in credit repair. Okay, don't co-sign for people. Your name is valuable. It's one thing for you to make a mistake and it shows from your credit report, but it's another thing to have someone else make a financial mistake and it's reflected negatively on your FICO score. And make sure you keep track of all your bills, your payment slips and so forth, because you don't want anything that slips through the crack. Keep track, because that happened to me. I got a late pay on my credit report about 14 months ago because I have a lot of credit cards, right? And it's simply because, oh, this credit card had a monthly fee and I didn't have an automatic bill pay. Or I had a yearly annual fee, I meant to say, but I didn't have a payment on automatic bill pay. So you want to make sure you stay prudent and check all your bills, your credit card statements and so forth, so that nothing slips through the cracks. And if you want additional tutelage on credit repair, business credit, we actually have videos on YouTube educating you more about the subject. And we have more webinars as well. So just make sure you check our emails for more information, or emails on our YouTube channel. And the ideal credit profile, I get this question a lot, that's why I put this up here. But hey, what should I aim for, Juan Pablo? You talked to me about removing negative items, improving my income, improving my credit. But what should I aim for ideally? Well, here you go. You want to have a debt utilization of 30% or lower. Debt utilization is the amount of debt you have charged on your accounts, your revolving debt, like credit cards, for example. So let me give you a scenario. If you have a $1,000 credit limit with Bank of America and you have, let's say, 600 charged to it, 600 over 1,000 gives you a debt to credit ratio of 60%. 60%. You want to have it less than 30%. And one quick way of improving your debt utilization, ask for credit line increases, more than double the amount. Or if you have the financial means to do so, pay down the debt. Another way to make your ideal credit profile look pretty, have fewer than five inquiries per bureau in the last 6 months. And we provide do-yourself ink removal as well. Just check out our ebooks on 100percentfinance.com. You want to have a 720 plus FICO score, no bankruptcies or foreclosures, no late pays within the past 6 months, or I would say 24 months even, a 10-year credit history, 1 mortgage, auto loan, 2 revolving credit cards. That's like the ideal profile that credit bureaus love. Most creditors love as well. No trade lines. If you don't satisfy ideal profile, no worries. You can still do real estate without it. Having pretty credit is not the end-all be-all to real estate investing, but it makes life so much easier to buy your first home in 2018. There are creative financing strategies as well. Okay, you can do lease options, you can do master lease options, you can do wraparound mortgages, you can do seller financing, but it's predicated upon the business savvy of the real estate investor. You gotta have that creative mindset. And if you do qualify, apply for business credit. Even if you're averse to using debt for real estate, I still apply for business credit so it can be a safety net. Worst case scenario, if a furnace goes out in the middle of winter, guess what? You still can get access to business credit to help soften that blow. Or if you want to increase your marketing, even if you're not into real estate, it could be any business expense. You want to improve your marketing. Or you want to have one credit card to keep track of all your operating expenses for tax purposes. By all means, use business credit for that purpose as well. Okay. Now, applying for an investment mortgage. As I mentioned earlier, find the money, then find the deal. And I just stated the mortgage broker versus the mortgage lender. So it's funny that you guys are actually asking questions that I've already outlined in my PowerPoint. So that means we're on the same page. I'm glad you guys have these questions. And as I stated with a residential mortgage versus a commercial mortgage, residential mortgages, unfortunately, 80% of their focus is on you, the borrower. So they want everything to be in your personal name. They're going to ask for your tax returns, your bank statements, ask for letters of explanation, and so forth. Commercial, so much more easier. I love commercial. Less of a pain in the butt. It's easier to do deals. Next, don't let them run or pull your credit, mortgage lenders. Just give them a copy of your credit report. Be specific with terms and what you need to do to qualify. If they say, well, unfortunately, sir or ma'am, you don't qualify. Okay, specifically, what do I need to do to qualify? Or if I do qualify, please tell me the terms. What's the interest rate? What's the amortization period? How many points? Be very specific. And if you disqualify for credit reasons, enroll in our credit repair program and apply for low doc. It has lower underwriting criteria than a conventional mortgage. Okay, and if you're disqualified for income reasons, then consider creative financing as well, or low down mortgage. And if you do qualify, again, get a pre-qualification letter. And I want you to watch more videos or watch future webinars by checking out our emails on the importance of credit and business credit. Okay, but if you want to get straight to it, because some of you guys are just action takers and not time wasters, just book a call on our website, 100percentfinance.com. And again, request the 3 secrets on how to improve your name variations as well as your addresses and opting out. Okay, we'll give that to you only upon request. And as promised, we'll send a recording out via email. So you have to register to our email. If you register for this webinar, and yes, you register our email, you will get it within 2 business days. It will just take us a few moments, to edit it. Okay. All right, great. So we have another question I have here. I placed this on my Facebook group. Has anyone closed on a deal this year? Please comment below. If so, this was in 2017, by the way. If so, a question by me. If so, let's celebrate their success for they accomplished their goal ahead of schedule. You are next. So Leonard said he did 2 deals. Key said, yes, you've seen his testimony. Alex said 2 deals, working on 3. Ariel said, congrats, guys. Mark and Tim said, congrats as well. Hassan said, congrats. Hakia says she's closed 4. So we got people in our Facebook group, people who enroll in our coaching program who are closing deals. Bobby Young, he said, like Future said, I'm focused. I'm back on my mission. Juan Pablo, I'm getting another deal closed 2 weeks before my birthday and before the end of this year. All the 100 PF, 100% finance way. So shout out to you. That's excellent, Bobby. Latanya Deloach, she sent this comment a few days ago because I did a live webinar event or live event this past Saturday. I forgot what day it was, the 9th, whatever the day was. Yes, your do-it-yourself inquiry removal guide. The only thing that worked, because I purchased a lot of other letters that didn't, your inquiry removal guide built my credit score to a 736. So our stuff actually works, guys. We have a ton of testimonies, so it's definitely legit. Okay, so again, if you need credit repair funding, book a call. It's free consultation, and request to receive our 3 secrets to improving your credit. Credit monitoring service, make sure you have privacycode.com or Credit Check Total. Apply even if you think you don't qualify. We offer the following services: business credit, low dot mortgages, real money, that's the real estate acquisition line or hard money, but it's a little bit softer because it's that low interest rate, and credit repair. Check out 100%finance.com if you need some help. You'll get to recording within 2 business days. Book a call, free consultation, receive a 3 secrets to improve your credit. 100%finance.com, and again, help us serve over 600 clients improving their credit this year, and help us provide over $10 million in funding this year as well. All right, great. So I appreciate your time, guys. To your success, continue to earn passively, live passionately. Peace.